Hello, everyone. Thank you very much for joining us once again today. And we are discussing today the impact of corporate tax on the free zones. We all know this, that the cabinet decisions as well as the ministerial decision has been introduced on the qualifying income, long awaiting decision. So now we are in a position to discuss the impact of corporate tax on the free zone. Almost everything is clear right now. We would be in a better position to assess the impact of corporate tax on the free zone businesses and which income is subject to tax at 0%, which income is subject to tax at 9%. All these things we'll discuss in detail. So in our previous sessions, we have already discussed overview of the UAE corporate tax law. We have discussed resident and non-resident taxable persons. We have discussed exempt persons, out of scope persons, UAE sourced income, permanent establishment and its history, corporate tax registration, application of corporate tax on the partnership, application of corporate tax on the free zone businesses, application of corporate tax on the family foundations and trust, how to compute taxable income, unrealized gain and losses on assets and liabilities. We have discussed deductible expenses, interest cap and rules, cabinet, minister, and federal summary of all these decisions. We have discussed small business relief, tax grouping, and tax loss provisions we have discussed as well. So as I mentioned in this lecture, we are going to discuss corporate tax on the free zone persons. We all know this, that as per the Article 3 of the UAE Corporate Tax Law, the law says 0% corporate tax will be applicable on the qualifying income. Any income which is non-qualifying income, that income will be subject to tax at 9%. From the above requirement of the law, this is very clear that the corporate tax is applicable on the free zone businesses as well. Because a lot of people were asking questions, the corporate tax is applicable on the free zone business. The answer is yes, this is applicable on the free zone businesses as well. Might be they are earning qualifying income, might be they are earning non-qualifying income. In both of the cases, they will be liable to register, they will be liable to submit the return as well. So this definition of the law has arise four major questions. The first question is, what is free zone? The second is, what is free zone person? The third is qualifying free zone person, and fourth one is, what is qualifying income? We'll discuss all these four concepts one by one. Then we'll discuss qualifying, non-qualifying income, what are the excluded activities, what are qualifying income. All these things we'll discuss in detail. The free zone person, the definition of free zone person has been given in the law, and the law says a designated and defined geographic area within the state that is specified in the decision issued by the cabinet at the suggestion of the minister. This is called free zone. So free zone is a designated and defined area. But the important thing is they are asking that has been specified in the decision issued by the cabinet at the suggestion of the minister. So we have not received any decision related to this right now. What are the basically key areas, free zones, which are a part of that decision? Might be we need to treat all the existing free zones as a free zone, or we can treat as a designated zone as given in the VAT law as a free zone. I personally feel we need to wait for a decision related to this, which businesses, which free zones are part of the free zone, which are basically as per this definition. Then the next question is qualifying free zone person. In the qualifying free zone person, it has been very clearly given in the law that a juridical person incorporated, established, and otherwise registered in the free zone. This includes a branch of non-resident registered in a free zone as well. So this is the definition which has been given in the law. And this definition ruled out that any natural person which is conducting business, which is not a juridical person incorporated or established in the free zone, that person will not be considered a free zone person. Means if natural person is there, that natural person is doing any business, because natural person, any person who is doing a sole establishment, civil company, sole establishment or civil company, both are part of the natural resident person. Means these sole establishment, these civil companies will not be considered as a free zone because free zone person only include a juridical person incorporated and established in the free zone. So companies like limited liability company, partnership where the liability of any of the partner is not limited. I mean, limited liability partnership will not be considered a free zone person. Like funds structured as a legal entity, public shareholding companies, public joint stock companies, branches of non-resident juridical persons. All these are, if they are incorporated, if they are established within the free zone, then we can say this is the resident juridical person registered and incorporated in the free zone. So this is the definition of free zone person. The first thing we will discuss free zone. Free zone, we said, is a defined geographical area as given in the decision of the cabinet. Second thing, free zone person means any juridical person which is registered, established or incorporated in the free zone. This is called juridical person. This is called free zone person. The third thing is what is qualifying free zone person. In the qualifying free zone person, in the law, they have given the 4 requirement. If any of the business, any of the juridical person which is registered in the free zone, if that juridical person fulfills these 4 conditions, then we can say this juridical person is a qualifying free zone person. Out of this requirement, the first one is the person maintain adequate substance in the UAE. The second category is derived qualifying income. Third one is not elected to be subject to corporate tax. And fourth one is complies with the transfer pricing rules and regulations. Out of these 4 conditions, we have already discussed in our previous lectures as well, that the adequate substance they have taken it from the economic substance regulation rules and laws, which say the person must be have SIGA, core income generating activities in the UAE. Then the person management in the UAE, adequacy test, adequate assets, expenditures, and adequate employees should be there. But now in the cabinet decision, the ministerial decision, they have defined the adequate substance as well. This is more or less same that we'll discuss in detail. In this decision, they have defined the qualifying income as well that we'll discuss in detail. Other than these 4 conditions, they have provided 2 more conditions in the ministerial decision 139. These 2 conditions are: the non-qualifying revenue should not exceed the de minimis requirement. We need to look into this. What is de minimis requirement? And the 6th condition is qualifying free zone person will need to prepare the audited financial statement. It has already been clarified in the previous cabinet decisions. So on overall basis, we can say there are 6 conditions. These 6 conditions are the qualifying free zone person. If all these 6 conditions are being fulfilled, then we can say the person is a qualifying free zone person. And these are: maintain adequate substance in the UAE, derives qualifying income as specified in cabinet decision, comply with prevailing transfer pricing rules and regulations, has not elected to be subject to corporate tax, meet de minimis criteria, and have audited financial statement. If all these 6 conditions are being fulfilled, then we can say the person is a qualifying free zone person. If the person is not fulfilling all these 6 conditions, then the person will not be classified as a qualifying free zone person, and for the current tax period and for the subsequent 4 tax period. So we need to be ultra careful on this. These are the minimum 6 conditions. And these minimum, out of this, if any of these 6 conditions is not being fulfilled, then we will say the person will not fall in the category of qualifying free zone person for the current tax period and the subsequent 4 tax period. And once the person is not part of the has not been classified as a qualifying free zone person, then the income of the person, any income, even the qualifying income, whatever they are earning, it will not be subject to tax at 0%, because the basic criteria for a qualified free zone person, it is that the person must be a qualifying free zone person to take the 0% advantage on the qualifying income. So we'll discuss all these concepts, 6 concepts, one by one. Some of these we will discuss in the current lecture in the same webinar that we're discussing right now, and rest of the item that we'll discuss in our future webinars. Out of these 6, we will discuss maintain adequate substance in the UAE in this lecture, qualifying in this lecture, prevailing transfer pricing rules and regulation. We will have full-fledged 6 webinars on the transfer pricing rules and regulations. Then de minimis criteria will discuss in this webinar as well. So what is the adequate substance? In the economic substance law, they said the person must satisfy the ESR, and for the ESR, they are providing 3 major tests. One is a Seeger test, core income generating activities should be in the UAE. Second is a management test. There should be at least 1 annual management meeting in the UAE. There are 3 other categories are there. These 3 categories, the person must be adequacy test. And under the adequacy test, the person must have adequate assets in the UAE, adequate employees and adequate expenses in the UAE. Almost the same definition has been replicated in this corporate tax law as well, but they have removed the requirement for the management test. So in this law, they said for the adequate substance, first they have removed the requirement for the management test. Second change is, initially in the ESR, the law was asking in the UAE. Now in the free zone, the law is asking in the free zone. We need to be very careful on this. They're asking in the free zone. Means free zone person, qualifying free zone person must have core income generating activities in the free zone. Second, adequacy test, adequate assets in the free zone, adequate employees in the free zone, adequate expenses in the free zone. If anything is on the mainland, then it will be assumed that the person has not met the adequacy test. So to meet the adequacy test, the person must have core income generating activities and then all the rest of the adequacy tests in the free zone itself. Then this de minimis requirement. For the de minimis requirement, law says if you are non-qualifying income, we'll discuss what is qualifying income, what is non-qualifying income. If your non-qualifying income, law says if your non-qualifying income is 5% or 5 million, whichever is lower of the total income, then it will be assumed that the person has met the de minimis requirement. We will learn how to calculate this 5% and 5 million, which is lower. In example, we have given that total revenue is 120 million. Out of the 5% is the total revenue is 6 million. Threshold is 5 million. So NQA non-qualifying income should not be more than 5 million. In the same way, in the example 2, total revenue is 80 million. 5% of total revenue is 4 million. Threshold 5 million. NQA should not be more than 4 million because the criteria is 5% or 5 million, whichever is lower. Now the question arises, how can we calculate this 5%? While calculating 5%, the formula is non-qualifying income divided by total income into 100. So in the numerator and denominator, this is very in the numerator, we need to include the excluding activities and non-qualifying activity where the transactions are with the non-free zone person. We need to include only 2 things. In the numerator, excluding income from the excluding activities. We need to include the income from non-qualifying activities where non-transactions are with the non-qualifying transactions are with the non-free zone person. Only 2 things will be appearing there. While in the total revenue, all the revenue of the free zone person will be included except the revenue from the domestic and foreign PE as well as the revenue from the immovable property, unless the immovable property generating qualifying income. We'll discuss in our coming slide. So what is excluding activities? What are the immovable property? We'll discuss all these things straightforward right now, but just for the understanding purposes, how to calculate this de minimis. De minimis is non-qualifying income divided by total income into 100. If this is less than 5% of the total income, if the answer is less than 5%, the maximum is 5%, or the value is less than 5 million, then we say the person has met the de minimis criteria. Once the person has met the de minimis criteria, we'll say the person has met one more condition, which is required the person to be qualified, to be considered as a qualifying free zone person. Now we are proceeding further. We are discussing the qualifying income. In the qualifying income, as given in a previous slide, excluding activities, qualifying activities, domestic PE, foreign PE, immovable property, we will discuss all these things one by one. So in the qualifying income thing, and look into this diagram, what is the basically, if one person is based in the free zone, maximum the person where the person can do the transactions. If one body is in the free zone, they can have a transaction with the same free zone, with the other free zone, or rest of the world. In the rest of the world, there are two further categories, the UAE and out of the UAE. So if I'm classifying the jurisdiction or area where the person can make the transaction, a free zone person can make the transaction, assuming one person is based in Jafza, the person can make the transaction with the entities within the Jafza. The person can make the transaction with the other free zone person like Davza, like SAF zones, like ADGM, like DIFC. So within the Jafza, out of the Jafza with other free zones, or out of the free zone on the mainland, UAE mainland, or with the rest of the world. So these are the maximum 4 categories where the person sitting in the free zone can make the transactions. You need to just keep in mind to understand what will be the implication, how we can calculate the qualifying income. So the 2 major categories are there. If I'm going to classify into 2 major categories, these 2 categories are person is making the transaction with the free zone person is making the transaction with the rest of the world. 2 categories. So just look into this diagram. Income of the qualifying free zone person. As I mentioned, there are 2 possibilities. Person is making the transaction with the free zone parties, person is making the transaction out of the free zone parties. If the person qualifying free zone person is making the transactions with any other free zone person, then the law said the income of that person will be considered a qualifying income unless and until these are falling under the excluding activities. We will look into the excluding activities as well. So we can establish it if the person is located within the free zone and making the transaction with the free zone party. From there, the person is generating income. So income of that qualifying person will be considered qualifying income. It will be subject to tax at 0%, except the income from the excluding activities. We will discuss what are the excluding activities. You just keep in mind, law is not asking here qualifying and non-qualifying activity. Law is simple asking all activities, income from all activities will be 0% except the income from the excluding activities. Now they have given a special status to the immovable property. If there is an immovable property within the free zone, and from that immovable property, the person is generating the income. Law defines the immovable property. Immovable property means the business, the premises which is being used exclusively for the business purposes. This is called commercial immovable property. So other than the property is being used for residential purposes like hotels. So law is very clear regarding this. Special treatment for the immovable commercial property. If this is the immovable commercial property which is being used exclusively for business purposes, and the qualifying free zone person is making transaction with the other free zone person, then that income will be qualifying income. Other than this, every income from the immovable property will be non-qualifying income. I am repeating, if the free zone person is generating any income from the immovable commercial property by making a transaction with the other free zone person, then it will be assumed that this is a qualifying income. Other than this, any income from the immovable property, either residential, either commercial, where the transaction is being made with the non-free zone person, and non-free zone person, we know, might be the UAE mainland, might be out of the UAE, then that income will be considered non-qualifying income. So this is the one leg that the person can make the transaction within the free zone parties, basically building within the free zone, other related party within the other party within the free zone. So this is the one leg as we discussed earlier. The second leg is the person can make the transaction out of the free zone, and the building is not even in the free zone, building is also out of the free zone. Where the person is making the transaction out of the free zone, there are 2 possibilities. That the person is making the transaction with his PE. This PE can be on the mainland, and this PE can be out of the UAE as well. If the PE is on the mainland of the UAE, this is called domestic PE. And if the PE is out of the UAE, then this is called foreign PE. So law says if the qualifying free zone person is making any transaction with the PE, either domestic, either foreign, and from that PE, the person is generating any income, that income will be subject to tax. It will not be considered a qualifying income. The second category is the person can make the transaction by sitting in the free zone. Out of the free zone, the person can make the transaction with the non-free zone parties, non-PE parties. I'm asking non-free zone, non-PE. And if the person is making any transaction with the non-PE and non-free zone party, then we need to look into this. The person is making the transaction related to the qualifying activities are not qualifying activities. And if the person is generating any revenue out of the free zone from the qualifying activities, then the law said unless the qualifying activities are considered under the excluding activities, then it will be considered qualifying income. Other than this, every income will be considered non-qualifying income. So very straightforward, if I wanted to say, the crux is what is my qualifying income? These are the four qualifying income. Other than this, every income is a non-qualifying income. So what are these four qualifying income? First, income derived from the free zone person, where the commercial property exclusively used for business purposes, where the other party is a free zone party. Means commercial property within the free zone, qualifying free zone person is making transaction with the other free zone party, and that is a commercial immovable property. That income will be considered qualifying income. Second, income derived from the free zone persons except from the excluding activity that we already discussed. Income derived from the non-free zone person from qualifying activities which are not excluding activities, that we have discussed as well, that if the person is making any transaction out of the free zone, and this is from the qualifying activities, unless those qualifying activities are not excluding activities, then that income will be considered as a qualifying income. And the fourth one is where the de minimis requirement is being met, that income will be considered qualifying income as well. So on overall basis, we can say, what is my qualifying income? Four things are there, as I mentioned. Income generated from the other free zone person, unless these are from the excluding activities. Income generated from the out of the free zone from the qualifying activities, unless those qualifying activities are falling under the excluding activities. Income generated from the de minimis, and income generated from the commercial property which is being used exclusively for business purposes, and this transaction is being made with other free zone person. And same thing we discussed earlier as well. Whenever we are applying the de minimis criteria, we need to, in the nominator, two things: income from the excluding activities, income from the non-qualifying activities. These will be the nominator. In the denominator, every income will be there. Every income will be there except the income from the PE, and this PE can be domestic PE and foreign PE, and as well as the income from the immovable commercial property, unless that immovable commercial property is generating qualifying income. So I have mentioned in the last row of this is the diagram as well. So just you need to look into what needs to be included, what should not be included. So I think we are very clear what is my qualifying income. Now we are discussed at the beginning four things. First of all, we'll discuss free zone. We know what is the free zone. Only one cabinet decision. I personally believe one cabinet decision will be introduced that will be considered. Okay, this is the list of the free zone person. In case they are not introducing anything like this, because it has been given in the law. If in case they are not introducing anything like this, then we need to assume every free zone will be assumed as a free zone for corporate tax law as well. This is the first thing, free zone. Second thing of free zone person, which are juridical person registered and established within the free zone. That's like a free zone person. Third thing was adequate substance. The person must have core income generating activities within the free zone, and the person must meet the adequacy test: adequate assets, adequate expenditures, or adequate employees within the free zone. If this adequacy test, the second leg, is being outsourced, then the party to whom these are being outsourced, that party must be within the free zone as well. So this is the third. And the fourth one was the qualifying income. We have discussed there are four income which are qualifying income. Other than this, every income is a non-qualifying income, and it will be subject to tax at 9%. So what are the qualifying activities? These are the qualifying activities. For your convenience, I have rearranged it. Basically, I put the goods and material together, services together, related party together. So I said manufacturing of the goods or material, these are the qualifying activities. Processing of goods or material, this is qualifying activity. Distribution of goods and material from the designated zone. This designated zone law has said very clearly, this is as per the VAT law. Means designated zones, fenced area under the custom control. So if qualifying free zone person is based within the designated zone, from the designated zone, the person is delivering the goods on the mainland, and which are being used for reselling purposes, are being used in another product which is being resold, then it will be qualifying activity. But if the goods or material as being sold to the end user, then it will not be assumed this is the qualifying activity, then it will be considered non-qualifying activity. So basically, distribution of goods and material for resale purposes are built into the item which will be resold, then this is the qualifying activity. Otherwise, this is not a qualifying activity. and the person must be based within the designated zone. This is also very important. So fund management services subject to regulatory oversight of the competent authority in the state. This is also qualifying activity. Wealth and investment management is a qualifying activity. Headquarter services provided to the related party, qualifying activity. Treasury and financing service to the related parties. So three things related to the goods and services, two services, and remaining to the related party. Other than this, holding of shares and other securities, reinsurance activities are qualifying activities. Insurance is a non-qualifying activity. You need to be careful on this. Logistics services is also non-qualifying activity. Ownership, management, operation of ships. This is also qualifying activity. Financing and leasing of aircraft, including engines, portable components. This is also qualifying activity. Any other income incidental to all these activities will be considered qualifying activity. So we can say three things related to the goods: manufacturing of the goods and material, processing of the goods and material, distribution of the goods and material. Two for services, fund management services, wealth and investment management services. Two with the related party, headquarter services to related party, treasury and financing services to the related party. Rest to holding. These are the basic financial activities: holding of shares and other securities, reinsurance, logistics services. Then rest to our ships and aircraft. And the last one, any income incidental to all of these activities will be considered qualifying activities. The excluding activities. We said excluding activities, basically we said every free zone person income will be qualifying income other than excluding activities. So if free zone person is generating any income out of this, so it will be considered non-qualifying income. It will be subject to tax at 9%. So excluding activities. What are the excluding activities? In the excluding activities, there is any transaction with the natural person, any transaction with the natural person except these four transactions. Means all the transactions with the natural person will be excluding activities except these four transactions. Fund management services provided to natural person, wealth management services provided to natural person, ownership, management and operation of ships to provided to the natural person, or any financing or leasing of aircraft to the natural person. Other than these four categories, every transaction of the qualifying free zone person with the natural person will be considered excluding activities. And these four will be considered qualifying activities. Income from these activities will be considered qualifying income. Banking activities subject to regulatory oversight of the competent authority in the state, excluding activities. Insurance activity, as I mentioned, insurance itself is excluding activities. Reinsurance is qualifying activity. Financing and leasing of activities, these are also excluding activity except to triering financial services related party and financing leasing of aircraft. So other than these two transactions, all the finance and leasing transaction will be excluded, will fall under the excluding activities. Ownership, exclusion, immovable property. Other than that, the immovable property generating qualifying income, all the immovable income from the immovable property will be considered excluding activities. Only if the commercial property within the designated, within the free zone, and the qualifying free zone person is making transaction with the other free zone person, then it will be assumed this is the qualifying income. It will be considered qualifying activity. Other than this, every transaction related to the immovable property will be assumed that this is the excluding activity. Any income from the ownership and exploitation of intellectual property, it will be assumed as an excluding activity, or any other income related to these activities will be considered under the excluding activities as well. So this is the qualifying free zone person limitation. These are the limitation. I think we have already discussed in our previous lectures as well. The qualifying free zone person cannot be part of the qualifying group. We know the threshold for the qualifying group is minimum shareholding of 75%. Qualifying free zone cannot join in tax group because we know the minimum threshold is 95%, but still the person cannot join the tax group. They cannot enjoy the restructuring relief as well, and they cannot transfer their losses to another taxable person at the book value, but they need to transfer at the market value. Thank you very much. This is over from my side. If you have any question, you can write it to us. It will be played. You can drop me an email. You can give me a call. You can give a call to our tax directors, tax managers, or assistant managers. You can give a call to any one of them. Definitely will be back. And as I mentioned, we are always ready to listen. We understand and we deliver. Thank you very much for your support. So if you have any question, you can ask. The first question is, I have seen the designated free zone such as the DMCC records are not included. So if a DMCC free zone can only deal in the overseas business is buy from China and sell to Nigeria, will their income be qualifying income or 0% income? First of all, as you mentioned, I personally believe we need to have one cabinet decision on the free zone. And in case the cabinet, we are assuming for the time being, these are part of the free zone. If this is a part of the free zone, now the question is, free zones such as DMCC, RACs are not included. So if a DMCC free zone company only deals in overseas business, buying from China and selling to Nigeria, will their income be qualifying income for 0%? So basically, if this is not part of the excluding activity, first of all, we are dealing free zone person, we need to stick to the basic leg. We are dealing with the free zone person, we are dealing out of the free zone person. If we are dealing out of the free zone person, we are dealing PE, non-PE. If this is non-PE, it will non-free zone person. Any income from the non-free zone person is subject to corporate tax unless the income that we are getting is from the qualifying activities which are not itself excluding activities. So if you are buying from China, selling there, I think this is not a qualifying activity, because in the qualifying activity they are asking manufacturing of the goods, processing of the goods, distribution to the reseller. These three things are there. If you believe that you are giving it a reseller, then we can say this is, otherwise will not be. What about the Iraqi company? They cannot employ staff, have office. How does the ESR rule apply? You need to hire, otherwise it will be straightforward non-compliance. What about export of goods and services? Is it qualified activity? No, in the goods and services, this is not a qualifying activity. Goods, this is manufacturing, processing, and redistribution is a qualifying activity. Other than this is not a qualifying activity. No more question? Okay. The earlier criteria, non-qualifying income to meet threshold was 1 million. Is this not valid anymore? And any income question, if not qualifying income doesn't meet the minimum criteria of reason 9%. Okay, the earlier criteria for non-qualifying income to meet threshold of 1 million. Okay, threshold is 1 million is applicable for the natural person. This is not applicable for the juridical person. We are talking about the juridical person, because qualifying free zone person must be a juridical person. 1 million criteria is only for the natural person. Second, is it not valid anymore? This is the valid, but for the natural person. Another question, if not qualifying income doesn't meet the minimum criteria, does the free zone entity have to pay? Yes, for sure. If out of the 6 conditions, you are not meeting even a single condition, you will be out of the qualifying free zone person for a current tax period and the subsequent 4 tax periods, and your income will be subject to tax at 9%. Hasib is asking, what about small business relief and transfer of accumulated tax losses? Is not covered to say the qualifying for this. Okay, we have already discussed qualifying free zone person cannot enjoy the restructuring relief, cannot become a part of the tax group. They cannot transfer their losses. We already discussed. What about small business relief? Small business relief is just this. I think this clause will be applicable for the free zone person as well. And small business will be applicable up to 31st December 2026. If their income is up to 3 million, they will not be subject to corporate tax, because this, I think that provision of the law for the small business will override this free zone management decision, so cabinet decision and ministerial decision. CB is asking, telecommunication services can be qualified income or not? Telecommunication services cannot be qualifying income. Can you explain the meaning of juridical natural person? Juridical person means natural person includes individuals, sole establishment, and civil companies, and any company other than this. Juridical person, usually LLC, partnership, public listed company, these all are juridical persons. Hasib is asking, general traders in the free zone selling to mainland, which will be resold or used in making the product, is a qualifying activity? Yes, this is a qualifying activity, because this is a redistribution. It will be a qualifying activity. You guys asking, if free zone person elects to be subject to tax, will they be treated like a mainland person again? I believe yes, they will be. There will not be any tax up to 375,000. Any income beyond that will be subject to tax at 9%. If free zone person entity qualify all criteria for qualifying income, does it have to register for VAT 0%? You will have to register it in either case. You need to register, you need to submit the return. So if your income, all your criteria you are meeting, still you need to register, and your income will be subject to tax at 0%, and you need to submit the return as well. One more question, if a qualifying free zone person elects not to apply the free zone CT regime, is the election irrevocable? Qualifying free zone person can benefit from 0% after subsequent 4 tax period. Law is silent about the irrevocable, but if you are become a non-qualifying free zone person for the after the end of the free four tax period, then again you will be able to enjoy the benefits of qualifying free zone person. Which consultancy services be qualifying activity? None. All are subject to tax. So basically, we do the funds management services and wealth management services, reinsurance services, logistics services. All these services are qualifying. Other than this, everything is non-qualifying. And okay, so any LLC company in mainland but not actively trading will still have to register for the any LLC company in mainland but not actively trading will still have to register. Yes, you need to register unless you are getting yourself deregistered. Free zone dealing only in third port shipment considered as qualifying income though. It will be subject to tax because out of the free zone, the concept will come non-qualifying. Unless you are doing any qualifying activity, we know the basically redistribution. If you are doing a redistribution, then it will be qualifying activity. Other than redistribution, everything will be subject to tax. So if we have a commerce business like Amazon, but our VA office in other country, but our company is registered in free zone, is it qualify or not? If we have an e-commerce business like Amazon, okay, but our office in other country, you will not be able to maintain the adequate substance. If you're not maintaining the adequate substance, condition will not be fulfilled. Once condition will not be fulfilled, then it will be subject to tax. Small business lead person has to register for CT. Yes. Adequate substance. Can a business with smart office only and doing third port to office only? You must have adequate resources, expenses, SIGA core income generating activities. All these things should be in the free zone. Otherwise, if these are being outsourced, it should be outsourced to the free zone person. Harun is asking, is a qualifying free zone person is a branch of mainland entity? The qualifying free zone person is a branch of mainland entity. Okay, then still it cannot be the part of the tax group. Qualifying free zone person cannot be part of the tax group. This is straightforward principle. Will the free zone person have correct information on corporate tax and will he be able to guide their clients? Will the free zone person have correct information? Free zone person have correct information on corporate tax and will be able to guide their clients. I don't know. Might be they will have the information. Might be they will not have the information. Another question: if a free zone company is not having any qualifying income, will the company still need to have financial audited statement? Audited financial statement is compulsory for the qualifying free zone person, law says. And other than this, I think commercial law will apply. Still, you will be required to get the financial statement audited. Otherwise, your license will not be renewed. Will audit be mandatory for those companies filing for zero tax? Yes, if you are qualifying free zone person, audit is compulsory. Okay, guys, thank you very much. Thank you very much for your time. Have a lovely evening. If you have any questions, you can drop us an email for sure. We will come back to you. Thank you for being with us. Have a good day. Thank you. Bye-bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.